Now we look to the latest development of Chinese ride-hailing service Didi. That's after it endured a major crackdown on its home turf. NTD's Juliet Song has those details.
China's largest ride-hailing company is getting more bad news. Its stock shares plunging over 20%. That's after Chinese authorities ordering a crackdown on the company. Just a week ago, ride-hailing service Didi became a star in America's stock market.
They're going to be raising just about $4 billion. That values the company, in and around the $70 billion range.
The company has been called China's version of Uber. It boasts over 300 million users in the country, but lately it's been losing money.
This company has lost about $15 billion to date. And in 2020, it lost $2 billion, and for the first quarter, $1 billion. So the losses are staggering.
It's now looking to raise big money in the United States. The company recently listed in the U.S. stock market and started the process of selling shares to the general public, what's called an IPO, or initial public offering.
So this looks to be one of the largest IPOs this year globally, if not potentially the biggest IPO.
But what happened after all the buzz came as a surprise. 2 days after the company went from private to public, Chinese authorities went after it, ordering a cybersecurity review into Didi. Soon after, the crackdown started escalating. China removed Didi from the country's digital app stores. Officials also suspended new user registrations on the app. But Chinese authorities didn't give details on the reason behind the move. It alleges the company has seriously violated Chinese laws regarding the collection of user data. Didi says its revenue in China could take a hit following the crackdown. Still, in a statement, the company thanked authorities for their guidance and promised to fix the issue. It's left many wondering whether Beijing is using the crackdown to send a message. Aside from Didi, China also went after 2 other companies listed in the U.S. stock market. One interpretation is that the company's influence is making Beijing nervous. Major ones like Didi or tech giant Tencent have access to huge amounts of user data. This in turn gives them power that Beijing may not want them to have. The latest crackdown might just be a flex, a reminder of who's actually in charge. Juliet Song, NTD News.